Okay, g'day, Rudy here. Welcome to the uranium video. So before we get into the charts, just go through the fundamentals. So uranium, why? Because the demand for clean energy with baseload power, i.e. 24/7. Solar and windmills do not provide that. Okay, and this AI boom we're going into is very energy intensive. They need cheap, reliable power. The World Nuclear Association forecasts 28% increase by 2030 and nearly double by 2040. Most countries already use it. I'll show you this. In China, they're planning to build another 150 by 2035. Okay, so you think, oh, no one, we don't, it's banned in Australia, it's bad. No one, look at this. America has the largest number of nuclear reactors, around 94. Does about a quarter of that electricity. France, China, they've got 55 now, then 150 new. Russia, South Korea, Canada, Ukraine, Germany, Japan restarted several of its 33 reactors. India, United Kingdom, Spain, Belgium, Sweden, Switzerland, Finland, Czech, Slovakia, Hungary, Pakistan, South Africa, Argentina, Brazil, Mexico, Romania, Netherlands, Iran, Taiwan, Bulgaria. Okay, so there's a few countries out there that use it, eh? You wouldn't think it the way it's demonised here. Like, Labour in the last politics. Oh, everyone will turn into an Ooga Booga man if we mine uranium. Fucking green dream. It really annoys me. It really does. Net zero. Nah. Okay, so because of circumstances, there's been a decade of low investment in new capacity, which has led to a supply deficit. Okay, we got. So in terms of going forward, we need new mines, 6 to 8 large-scale projects, 60 to 80 million pounds annually by 2035. Now, Kazatomprom, they're the largest producer in the world. They produce 30 million. Okay, so we need 8 of, so we basically need about 16 Kazas, right, to close the gap. But this is the problem, it takes 10 to 15 years. So long-term uranium prices currently remain steady at 80, but they're forecast 90 to 100 by 2026 and then 150 to 200 long-term. Okay. So that's the fundamentals for getting into uranium producers or reactors. Okay, so this is the uranium spot price, so 83. Beautiful rounded bottom. Bit of a downsloping declining wedge. We know declining wedges, once broken, is bullish. So done the consolidation, now the next move up. Okay, so that all looks good. Alright, so how do we access it? Okay, well, in Australia, there's this URNM ETF. It's got Kamiko, Kaza. So I'll go through. You can see it's heavily weighted to these big boys. Okay, so they're having a consolidation, and so this, if you're going to buy, you buy now, otherwise it will be like one of these things. And like, imagine if these candles weren't there and all you did was saw this and that, you go, oh, it's going to go down. Up to you. So the usual benchmarking, URNM over MVR, the king. So it's got one of those broken, so the king's done alright this week, so he's been a draw. URNM over VAS. So the ratio of URNM over VAS, that means URNM is outperforming, and the same with VGS, outperforming. So you'd have more, you would have made more money. Okay, so these are the holdings in URNM. So you got Cameco. So they're basically your one-stop shop. So they're a uranium producer, second largest, and they build reactors because they bought this Westinghouse mob. So they mine it and they build the reactors. So it's like the king. And then you got Kazaa. They're the world's largest producer of uranium. So they're off and away. The next biggest holding is the Spot Physical Uranium Trust. So it's an ETF that just holds physical uranium. And you got Triple U Energy Fuels. So they're a leading US-based producer of uranium and rare earths. So they're having a consolidation week. And then you've got CGN Mining. So they're basically involved in trading natural uranium. So they're having their consolidation at the highs. Okay, so they're the main ones that make up URNM. Then there's another ETF called Atom. The difference is, so it's still got Cameco, 24% as its largest holding, but it's sort of aims down the nuclear reactor space. So it's got companies like NuScale. So these guys build, so like Westinghouse, they're building the small nuclear reactors. You know, that's going to be the going forward. So they're looking fine. And Oklo, so they're in that same space. They had a big run because they got involved with the government. So both, my preference is still URNM because I'd rather be attached to the miners. Let me get rid of that. But the ratio of the two basically shows they're equal, but that's a declining wedge. So my expectation is for URNM to outperform Atom. Okay, now my preferred ETF is this URNJ, but you need US access, and the currency risk isn't that real because this ETF is full of Australian investments, uranium miners, so you're effectively buying Australia. So I'll go through them, but what I prefer, so this is URNJ ratio over URNM. So I expect URNJ to continue outperforming. Okay, so the companies in URNJ, so we got UEC, they're a US-based uranium mining exploration company. Sort of tracks the uranium price there, doesn't it? So they're consolidating. You got Denison, largest undeveloped uranium project in Canada. You got NextGen Energy, development company in Canada at the highs. Then the first one of ours, so Paladin. So Paladin's cost is about $40, and the price is $80. You saw. So this is due. This is due for a re-rate. This one, like you saw what the other guys are doing. Then we got Deep Yellow. It's another one of ours in the ETF. So they're looking at starting production in 2027. So previous highs. That looks like it's ready to rock and roll. Then you got URI, which is in the ETF, which is a royalty company, so not a miner. Okay, then we got Encore Energy. They're a USA producer. $40 cost. So they just got themselves back up above support here. Okay, then you've got Bannerman, it's one of ours. They're in Africa, open pit mining. So they're going through a DFS. So that's a beautiful, that's support, consolidating, next leg up. You got ISO Energy. So they're trying to start an existing mine in America, consolidating at the highs. Boss, that's one of ours that's in the ETF. Got punished, had some technical issues with their feed. Anyway, they're right at support. Well, those smart people around that place, they'll sort it out. Lotus, it's again, that's another one of ours. Heavily supported by a couple of subscribers who give me lots of updates. So they're looking good. Fine, so they've broken out of the declining wedge here and consolidating. Perfect chart action. Okay, then we've got Alligator Energy. So development pre-construction in Africa. So it's breaking through resistance, consolidating at the highs. EL8, that's another one of ours. Namibia, open pit, advancing to production, consolidating at the highs. Peninsula, that's another one of ours. So they've restarted uranium in North America. They had a few issues. Anyway, they're at the bottom, so they'll work it out. Then Berkeley, it's another one of ours. Beautiful chart pattern, that one. Pre-construction phase. Had a few approval issues. Anyway, that looks ready to go. And Alligator Energy. Oh, look at that. Declining wedge break. Oh, developer in South Australia. Looking at an ASIC of 30. Using the ISR. Alright, so all those stocks are in that ETF. So that's why I say rather than just buy one of them and then you're at risk, you can just buy that URNJ and you get all of those that I just talked about in there. And there's little currency risk because you're buying Aussie. Anyway, now ones that aren't in the ETF but are here on the ASX that I know about or someone's told me about, a subscriber. So we've got DevX, so they're exploration stage, Northern Territory, rare earths in Queensland. Alright, so they've done the first hard work, so they need to break this resistance here, so it might be a bit of consolidation, then go. Haranga. Alright, so explorer for gold and uranium in Africa. Okay, well they've broken. Alright, well if you're a punter, you'd probably punt that. I88 explorer Portland Creek Uranium Project in Canada. Okay, consolidating above the support here. NXG. So it's another one on the ASX. Developer in Canada. Okay, well, that's alright. Consolidating at the highs. And then Toro Energy. Developer in Western Australia. Targeted for 20. Production targeted for 20. Apparently WA is going to let them go, I've heard. After banning the mining. people think when you mine uranium, you don't blow up. It's in case you didn't know. So it's about 2%. Like to make uranium, like bomb mate like thing, you need 98% enrichment. So what they dig out of the ground does not blow up. They've actually got to send it off to a factory and then cook it for a couple of years before they can use it. Anyway, Alright, well, that's the uranium wrap. Let us know your thoughts. Alright, see ya.